Hello, everyone, and welcome to Steppe Gold's Live Investment Summit today, hosted by Six. I'm pleased to be joined by Greg Wood, their Chief Operating Officer, and Anil Warich, their Executive Vice President. The team's going to walk us through a presentation, and after we're going to be entering into a Q&A session. I'd like to remind everyone in the audience that you can ask questions using the Q&A tab found on the right-hand side of your screen at any time. And as always, the summit is being recorded, and it's going to be available on Six.com in the coming days. Without further ado, Anil, Greg, I want to pass things over to you and get us started.
Great. Thanks, Cameron, and thank you everyone for taking the time to hear the update on Steppe, or for anyone new to hear the Steppe story. So Steppe Gold listed on the main board of the TSX. In May 2018, we listed the company actually in a very tough climate. In fact, we were the only main board mining IPO in 2018. Today, we're happy to say that we are a producer. We're actually expanding and doubling our production profile over the next 2 years. And yet we're still exploring on both of our properties, which I'll get into. So it's an action-packed story, given that we are a producer generating cash flow to fund the growth of our company. And we're expanding very quickly now into our much larger operation, which we call Phase 2. Usual forward-looking statements and disclaimers. So quickly, I'm just going to go over the milestones and kind of where we started, when we started, and where we are today. And where we're going, obviously. So we started as a private company in the end of 2016 with no assets and the aspirations of building Mongolia's premier precious metals company focused on Mongolia. 2017, we acquired both of the assets that we own today, with our leading and cornerstone asset being the ATO project, which we purchased for $20 million US from Steppe Gold. So Steppe had previously spent about $30 million US on this project, drilled 67,000 meters, 28,000 meters of trenching, and most importantly, got it fully licensed and permitted for our Phase 1 oxide mine that's currently in production, where we started in April 2020, but also our expansion project. So we are permitted to expand into our Phase 2, which is the sulfides or fresh ores, which currently has a 10.5-year mine life at about 100,000 ounces per annum, which will grow. We're seeing some additional exploration discoveries and extensions already, which I'll get into. So it was a fully permitted project, but we took a phased approach. So we built Phase 1 in about 14 months and brought that online. And that Phase 1 operation will run for about another 2 years from today. So we'll be able to continue to generate cash flow from Phase 1 while constructing Phase 2, which is already in construction today. And again, I'll get into that a bit more. But our second project is the exciting Udumhundi, or UK project for short, also in Mongolia, of course, 1,500 kilometers southwest of ATO. It's a 14,400 hectare exploration license that has never been drilled until now, which we just started drilling for the first time ever. Maiden drilling program of about 3,000 meters started this summer. So it'll be quite exciting to see what those results yield, given it's a maiden drilling program on a very large exploration license in a new gold district where our peers, Erdene Resources, have had a lot of success on their licenses, adjoining us to the north and south. So as I mentioned before, May 2018, we listed the company. We actually listed at $2 a share when gold was about $1,250. And we had not built the mine. So we had build risk, CapEx risk, finance risk, and even our final permit risk, which you can't get your final permit until you actually build the mine. Today, we're trading at almost half that value, having executed, having doubled almost our resource today, having increased our reserves by almost 8 times, and demonstrated many quarters of profitable production. And we are expanding. So certainly an opportunity for investors to accumulate, I guess, lower than a lot of our investors. Certainly some have doubled down, of course, in this tough market. But we are in a unique situation that we don't have to raise money to get a recovery or a re-rate in our stock. Just like in 2020, when we brought production online for the first time ever in April 2020, again, in a very tough environment. You couldn't get in the country if you tried. Our stock actually moved from about 90 cents to $3 that summer in about 3 months' time. So certainly today we're bigger and better, and that's the opportunity, I guess. So in 2019, as I mentioned, we started construction in 2018. 2019 we completed. In 2020, March, we actually started production. April 2020, our first gold pour. So we moved very quickly. It cost about 25 million US to build this heap leach mine that's now in operation. And in fact, our first quarter during COVID, we produced over 25 million US in revenue, over 10 million US of EBITDA. So it's a fantastic starter project that generates cash flow, establishes us as a producer, a taxpayer, a royalty payer, and an employer in country. Today, we have over 300 employees. So it's a fantastic result to have created those jobs from essentially nothing. And we're looking to double that workforce over the next 2 years as we move into phase two. In February of 2021, we put out our first updated resource and reserve update. As I mentioned, we increased our reserves from about 210,000 ounces when we purchased this project to about 1.6 million ounces on a gold equivalent basis. That will continue to grow, which I'll get into. Later last year, we actually put out a feasibility study on that expansion. It came in at about 130 million US of capex, added 10 and a half years of mine life at double our current production profile, so about 100,000 ounces in phase two, which today is about 10 and a half years ahead of mine life, which will grow. 2 weeks after that announcement, we actually received 60 million US of debt from within Mongolia, sponsored by the Bank of Mongolia. So it's a fantastic result to have that sponsorship within country. So we do consider ourselves a local company. In fact, a Mongolian company listed on the TSX. Today, our CEO is Mongolian, half our board are Mongolian, and most importantly, 99% of our workforce in country are Mongolian. And that's really how you should do business in any jurisdiction, is be as local as possible. And that's how you get the buy-in and you get the social license. And this actually isn't our first foray into Mongolia. Our executive chairman, Matt Wood, and our CEO, Bata Tumor Osher, have actually worked together since 2009. Previously built another company called Hunu Coal. That also had about 300 employees before it was sold for $500 million cash. So it was a 20 million IPO in 2010. And at the end of 2011, it was sold for $500 million cash. So we do have a track record of execution in country, which is very important. We certainly have the buy-in locally, provincially, and federally, as you've seen with the Bank of Mongolia sponsoring that debt package for expansion into phase two. So we are well-liked, I guess, in country and doing the right things. Today, we have just under 70 million shares outstanding. So 69.5 million shares outstanding. On a fully diluted basis, we'd be at about 85 million shares. So it is a very tight structure being a producer. And obviously with the fully diluted, we'd get another 22 million of cash. So today our market cap is roughly just over 70 million Canadian, just over 55, call it US, as a producer, generating what we think in the next 2 years, over 50 million US of cash, net cash to actually fund our expansion. So certainly, again, an opportunity. We have very strong support. I think most importantly is board and management team today own close to 20% of the company. We've been public for 4.5 years, have never sold a share, and we've bought on market when we can as well. So we are aligned with our investors. We're in it for the long run. We do see a lot of value here. As the market recovers, I think we'll have a lot of torque and leverage to that market, as we've seen just a couple of years ago. So there's a lot of opportunity here to recover and re-rate. We have strong backing from family offices. And then, of course, Eric Sprott is our largest investor today. In fact, he's actually accumulated more shares on market just recently. So he came in at a price of $2.15 over 2 years ago. And that was our last equity raise. We have not raised any equity since then, and we don't plan to raise any equity at these levels or even at that past level. So there's certainly a lot of opportunity, I guess, there. So it was a great endorsement to have Eric buy about 500,000 shares on market after our Q2 results came out in August. Very strong support. So he's probably closer to 10.5% of our company. Fidelity International owns 6% of our company today. They've been accumulating on market over the last 18 months at prices much higher than today as well. So you have very strong, sophisticated backers that are in it for the longer term that have accumulated at higher prices. So certainly an opportunity. And then, of course, Elliott Management and Triple Flag have been our backers since we were a private company in 2017. Very strong support. And they put in about $7 million of equity at $2 between the private and public rounds. So very strong backers, and we're looking over the next few months and quarters to continue to grow our institutional base. In fact, this is why we're doing these summits and marketing globally to increase the eyeballs on our story. Today we have 3 banks that cover our stock. We're looking to increase that. We think in the coming quarters that'll increase to 4 or 5 banks. We had a first site visit in over 2.5 years at the end of April. Additional banks came and they got to see the operation running full steam. Stifel GMP covers us, and Haywood Securities also cover us. So look to see more eyeballs on the story as coverage continues to increase. I can say that all of these analysts have ratings well above our current share price and multiples of it, actually. So for those who are new to Mongolia, why Mongolia? Well, obviously it's somewhere where our team has a track record of execution and success. It's what we believe is one of the last frontiers in terms of emerging markets, and highly endowed in terms of resources, home to world-class assets and discoveries and mines. So the ATO Gold Mine that Rio Tinto operates is one of the biggest copper mines in the world and expanding. And in fact, Rio Tinto just consolidated that structure and essentially has doubled down in country. So to have a super major like Rio Tinto double down in country is a very good validation, and adds more credibility that you can invest, you can operate. And as we believe, there's more world-class assets to be discovered in country. It's relatively underexplored. We have an advantage having created jobs, having built mines, and obviously created value for shareholders in country. You might have seen also Zijin Mining just made an announcement a few months ago. So that's a public announcement of a Chinese major making an investment. We believe you'll see a lot more interest from majors across base metals and precious metals companies into Mongolia. It's it's a safe country. It's parliamentary elections every 4 years. In fact, the current party has had a major majority since 2016, and they've been very supportive, pro-mining, pro-foreign investment, and pro Steppe Gold, obviously, if you've, as I mentioned, with the debt package and their support in country. So certainly, we think it's the best it's ever been in the last couple of decades, and a lot of room to grow still. So, it's one of the best jurisdictions we think in the world. So just highlighting quickly our operation today. Over the next 12 months, we're aiming to produce about 50,000 ounces. We restarted production in March of this year, which I'll get into, but we did have some supply chain issues last year, as everyone did. So we had to defer production for majority of 2021. But while doing so, we actually built a very strong stockpile of inventory to hit the ground running when we started production in March of this year. And we've been have had steady production and ramp up that will continue to grow. So it's as you can see, there's no just vegetation there. We're not disturbing anything. There's no people around. It's a very easy topography and region where we can build a mine, and now we're expanding. But this is our current operation. What I want to focus on here is kind of where we started and where we're going on this property here. So let me see if this works. This drawing. Actually, I won't get fancy on the slide here. There we go. Sorry. So ATO 1, 2, and 4 on the left here. This is actually what we started with. This was the 1.2 million ounces on a resource basis. Then that was inclusive of 210,000 ounces. ATO 1, 2, and 4. Now, Centerra model showed that these were all closed off, no room to grow. In fact, ATO 1 here looks like a carrot-like breccia pipe. You can see here. ATO 4 was similar until we actually extended it. So we've doubled the size of ATO 4, proved the model wrong, and then we've also added a new deposit called Mung. Mung means silver Mongolian. It's a precious metals deposit, roughly about 440,000 ounces today. All 4 of these deposits remain open. We've drilled ATO 1 and 2 for the first time ever late last year and have made new discoveries and extensions. So right now, this is down to about 400 meters vertical depth, Mung being drilled the maximum depth there at 400 meters. All 4 will continue to grow. But phase 1 is just the oxide mine at ATO 1, 2, and 4 from surface down to about 40 meters. That will be the next 2 years of production. Then we'll transition into the fresh ores or sulfides. That will be all 4 of these deposits, probably open pit for the first 8 to 10 years, and then there will be a decline underground at some point. So as I mentioned, this continues to grow. This asset continues to give. It's been fantastic. In fact, we've been mining grades of oxides that are 50 to 100% higher than in the model. It's been a fantastic result. Has equated to obviously more ounces from the oxide, and we think it might extend into phase 2 as well in terms of positive grade reconciliation. So this is just highlighting the reserve estimate I mentioned before. That gets us to about 1.6 million ounces on the gold equivalent basis. What I want to highlight here is the lead and zinc. So there's lead and zinc as well as precious metals in ATO 1 and 2. The lead and zinc grade that we used for that feasibility study at the end of last year are about 0.46% on the lead and 0.78% on the zinc. So as I mentioned, we've actually drilled below ATO 1 and 2 late last year. And now you can see grades that are 10 to 20 times higher than in the feasibility study. So 21 meters at 10.5% zinc, 55 meters at 4.2% zinc. A fantastic result. This is a lot of value add, like I mentioned, in terms of mine life extension that will translate into, I would say, meaningful expansion beyond the 10.5 years. And the beauty here is we've already put out a feasibility study to process these base metals. So there's no additional capex that we think that will be required to process this. So certainly very exciting hits here on the base metal side, and we're continuing to follow up on these discoveries and extensions. So we are drilling today at ATO 1 and 2, and I believe just under ATO 4. So as I mentioned at the beginning of the presentation, we are producing, but we're also exploring while we're expanding in our phase 2. And this is the exploration that we're completing now is underneath the deposits. I think in the future, we'll obviously step out from the property, and hopefully there are more discoveries like this to be made, satellite deposits that have both oxides and sulfides. But certainly this deposit has grown over from 1 million ounces to over 2, and we think this is a 3 to 5 million ounce footprint. So certainly what could be a 15 to 20 year mine life, if not more. So while we're constructing phase 2, we expect that it'll look a lot more robust in terms of production profile and life of mine. So let's going to highlight the feasibility study that we put out at the end of last year. It came in at about 130 million US of capex, $850 all-in costs, and as I mentioned, the lead and zinc grades, which are significantly lower than what we've now discovered and with meaningful intercepts. So a robust expansion. 130 million capex, which 60 million US was already lined up 2 weeks later. It's pretty unheard of to have that kind of capital lined up after an announcement of a feasibility study. And we will continue to grow on this baseline study in terms of optimization and growth. So this study doesn't include 400,000 ounces from that Mung deposit I mentioned. So we'll be adding that to the mine plan. As we continue to drill at depth, we'll be rolling that into the mine plan in the future. So this thing will only get bigger and better. Now I want to note that the all-in cost here at $850 were made with the assumption of diesel power for phase 2. In fact, we just announced just a few weeks ago that we have an agreement with the government now to connect to the grid. So that grid power solution for phase 2 is going to save us over $100 an ounce. So again, that's one optimization already since announcing the feasibility study late last year that we managed to complete. So that's a significant amount of savings, over 10 million US a year, if not more. So right now, obviously, we live in a world where things cost more, take longer. So with inflation, certainly to have a $100 offset already on this $850 for powers is a big win for the company, significant win. So now I'm just going to highlight some things in construction, and Greg, if you want to jump in here, any other updates, but we're just confirming kind of where we're at with this crusher, everything that's being completed over the summer in terms of storage.
Sure.
Please go ahead.
Yeah, so the major construction work going on at the moment is obviously the new crusher, which is for part of phase 2. That's still on track. Hopefully we're going to have that presentation. The chemical storage shed and the new fuel storage facility has also been completed. And last year too, we completed the construction of the boiler house, which aided us through winter production. That gave us a lot of data, particularly over the winter months when it's a lot colder. So this winter we should see much better production numbers than we did last winter.
Great, thank you. So now, obviously, we put this out obviously in our press releases, but this is the phase 2 crushing circuit that's being installed as we speak. So this is quite a big installation, probably about $10 million US of capex between the equipment purchase price last year and the installation. So this is a 1,000-ton per hour fixed crushing circuit. So it's quite significant in terms of increasing capacity on site. And the beauty is we get to ramp up and use it for phase 1 ahead of time. So it allows us to potentially process more phase 1 oxide ores in the future, but also get a head start on building up inventory in phase 2. So, next year while constructing, we can actually mine and crush the hard rock material and kind of build up an inventory there as well. So it's nice to work out any kinks during ramp up and startup of the phase 2 operation. This is much ahead of schedule. So phase 2 is moving forward, as I mentioned, and this is a big piece of it. Quickly on the operation side as well, obviously we mentioned the power solution that's over $100 savings and all-in cost for phase 2. An inventory, which is key here, is if we weren't mining or blasting for the next year, we still have inventory of about 80,000 ounces on an unprocessed basis. That's at 7% recovery. So, we have built up a very strong inventory. That's a lot of cash to Steppe over the next couple of years that we can continue to convert and use for our expansion and our exploration. So this oxide mine allows us to fund the equity component of the phase 2 while we bring on more debt, but also funds exploration, as I mentioned, on ATO underneath the deposits today, and also on our UK project, which I'll get into. So, as I mentioned, we restarted production in March of this year. What's been quite a big benefit to us, I guess, since May of this year is the Bank of Mongolia has been paying us 5% premium to spot pricing for all of our gold sales since May. So that's a significant benefit to Steppe, given that previously we were getting spot pricing with a $2 deduction per ounce for refining charge, and today now we're getting 5% premium. This is not something that will last forever, but certainly a big benefit to Steppe that we weren't expecting. So that's certainly a big benefit to us. So really quickly, we started in March production, 1,500 ounces, over 3,300 ounces in April, 3,800 ounces in May, and last month in August, we were just over 3,800 ounces. So you can see production has been steady and increasing, which is fantastic. It's profitable production significantly. I think our Q2 results came in at $800 all-in costs at site. Adding in all corporate, it's about $1,000. That will come down over time. We expect over the next 12 months, if we hit 50,000 ounces run rate, that should come down to about $850 all in. So certainly significant of cash flow coming in. In fact, our September production numbers should be significantly higher than August. We have received regular shipments of reagents, and we're looking to build up our inventory on site for those reagents over the next few months, so that we'll always have 5 to 6 months, we hope, of inventory for key reagents on site. So if there are any logistical issues or delays, we can still maintain production. But certainly a big win for us to have this production over the last 6 months continue without any issues. Now, last but not least, I just want to highlight our second project, which is the Udumhundi. This is a very exciting exploration project and license. As I mentioned, it has never been drilled. We've actually kicked off our maiden 3,000 meter drill program in the summer. We're just wrapping that up over the next few weeks. So it'll be very exciting now that you're going to get exploration results from ATO. You're going to get exploration results from this project. So our project is a license, all highlighted in the blue here. With the gold outlines are 4 discoveries there. As I mentioned, this has never been drilled. We're the first owners, but what's exciting is that it's been drilled all around. So the licenses to the north in the white here, in the south, that's held by Erdene Resources, our peers. They've had a lot of success in exploration and discovery in the last couple of years. They have over 1 million ounces between these 2 deposits, and I believe they're tracking towards 2 million ounces by the end of the year. So we're certainly in the right area. From surface, we've already seen some significant results: 1.5 grams gold, 450 grams silver, 3% copper. So very exciting new region and district that we're going to focus on through exploration. As I mentioned, we get to fund our exploration from our own cash flow. So quite a lot of news flow and catalysts over the next few months between exploration, between production updates on a regular basis, which obviously people can see the ramp up in cash flow increasing. And then obviously updates on phase 2 expansion. We're going to increase that debt package from the circa 60 million to about 110 million US towards the end of the year or by Q1. That'll allow us to have all the funding in place between our own cash flow and debt to fund the expansion in phase 2. And any other optimization work, as I mentioned before, for phase 2, between recovery work to increasing mine life to including Mung in the mine plan. So quite a lot of news flow and action for our story. With that, Cam, that's really the story here. So we're open for Q&A.
Yeah, absolutely. Greg and Neil, thank you for the presentation. I'd like to remind everyone in the audience that you can ask questions using the Q&A tab found on the right-hand side of your screen. But to begin with, guys, you've mentioned Mongolia as a mining jurisdiction, and I understand that the government is open to mining licenses. Is Steppe Gold going to continue to acquire more licenses as part of its growth strategy?
Absolutely. So yeah, we're not done by any means. Obviously, we have a lot on our plate in terms of our pipeline between ATO and UK. We think we can still build, a couple 100,000 ounces here in production profile. This UK license could be our next production center in a few years. We obviously have a lot of work to do here still, but given what's happened in that region already, we're fairly confident this could be another production center for us. So we are looking for additional exploration ground. We'll look at other advanced exploration and maybe even development projects. So our goal for Steppe is to acquire, consolidate the country and become the platform. So if any major corporate wants to come in the country, they should come through us. We want to build a resource profile that could grow to 5 to 10 million ounces between these projects and additional acquisitions, and a production profile that can get to 300 to 500,000 ounces. Really, we're looking to build a mid-tier precious metals company focused on Mongolia. A lot of opportunity, and I think the market should look for news on that as well as we continue to try to acquire and grow through exploration and additional licenses or acquisition.
Absolutely. Okay. Question, what's your take on the now resolved Rio Turquoise Hill dispute with government on the Oyu Tolgoi? Could that be inhibiting investor enthusiasm regarding Steppe?
Well, it's a fantastic result, finally, because we can stop talking about it. A lot of our meetings have been talking about that issue with Rio and the government, and we explained to a lot of investors that is an asset-specific issue, and it has been for over a decade, yet that mine has been built, is continued to operate. It was never stopped by the government, where you've seen that in many other jurisdictions. So it's continued to grow while this noise was around it. But we certainly had to deal with that with a lot of our investors or potential investors that pointed that out and assumed that was a country issue, and it wasn't. So thankfully, again, it's a big endorsement that Rio has stepped up and committed more capital and consolidating with Turquoise. It's a big win for us and the country. So yes, it did inhibit some investors, and I think now you'll see a lot more comfortable.
All right. Are you planning to stay focused on gold, or are copper deposits also on the radar?
Steppe is focusing on precious metals. Obviously, we have a base metal component with the lead and zinc at ATO. I guess if we drill and find some copper, as you've seen, there is some copper here at UK. There may be copper on our ATO mining license. Certainly, we're not going to discard it. It could be an added revenue and commodity in our portfolio. But our focus is precious metals. Rio Tinto has focused on base metals, obviously in country, and as many have focused on copper. Precious metals is still, we think, still relatively immature in country, and there are a lot of opportunities in country, like we discussed, for acquisitions, for exploration, and new discoveries being made. So our focus is precious metals, but as we've seen with the base metal component at ATO, we'll take it if it comes.
Great. Okay. So how is Mongolia and Steppe Gold, for that matter, impacted by the current geopolitical situation? And is it going to impact catalyst times? Most importantly, is the reagent supply going to continue to be a pressure for Steppe?
Yeah, obviously that was one of the biggest hits we took during this time, and it had to do with not just geopolitical, but also with the pandemic. So it was a double whammy over the last year, which has slowed things down, certainly. And that's something that obviously we cannot control. But what we've trying to do and have done is obviously build up the storage on site. We've had regular shipments for the last few months, and we're looking to continue to build on those shipments. So it's too early to say if we'll be impacted again, but we're doing all the right things to build up that inventory and buffer should there be delays again or some other issue arise. But yeah, we've definitely been impacted, like everyone has. But given where we're located between Russia and China, you have China's zero COVID policy, and you have obviously Russia with the war with Ukraine. Certainly, there is an impact on China. Yes.
Fair enough. Richard wants to know, why is the central bank paying a 5% premium for gold at present?
Yeah. So long story short, they need the gold. Gold allows the government to obviously to build up gold reserves, but more importantly, FX. With the zero COVID policy, there's less exports going into China. China is the biggest trading partner with Mongolia. All the exports of coal, copper, not gold so much, but iron ore as well, even oil, go to China. With the zero COVID policy, there's less exports, which means there's less revenue for the government, and so the gold allows the government to convert into USD or FX immediately to procure other products. They import almost everything. So certainly there's a need, and again, it goes back to that geopolitical question. In the region, there's obviously been a run on USD when this started, and so it's harder to come by, and obviously gold is the best way to get that. And so they're incentivizing us to produce more because they need it.
Okay, fair enough. This question is for Greg. We've all heard about the excitement about the Phase 2 expansion's progress, but what keeps you up at night regarding your operational expansion plan?
Good question. What keeps me up at night? Yes, as Anil touched on before, obviously over the largest on site, and that has obviously played a large part in our production levels. So, that was obviously probably the most stressful part of the last 12 months.
Okay, fair enough. Another question. We've heard briefly about your ongoing ESG commitments, but would like to hear more about what's on the horizon for reporting. Can you tell us how the recent professional development at Brock University with your team and in partnership with Triple Flag play into your future vision?
Yeah, sure. So yeah, that's great. I mean, Triple Flag is our fantastic partner. They're leading in the industry in terms of ESG with all the portfolio companies and their investments in those regions where they have investments, obviously, including Mongolia. So that partnership with Triple Flag to sponsor, and this wasn't Steppe employees. I mean, one of our environmental guys attended that development program. It was a multi-week development program at Brock, and they also went to Sudbury, toured mines. They're getting English as a second language classes specific to obviously mining, mining reclamation, environment, social, how to learn how to give back to the community. So these were 9 other members of our province, of Dornod province, where we are operating today. They came, government, from government to teachers even. So it was a fantastic way to educate on mining and also how they can impact their communities. And so, through that, we think we want to replicate that hopefully every year by bringing more people to learn, to sponsor, to show how we're giving back to the community and how they also can give back to the community. So it's a fantastic result to have that partnership, and it was a pilot that worked very well. I was down there to meet everyone. It's fantastic. So there'll be more of that. Today we already have a scholarship program. In fact, we've already hired one of the recipients of our scholarship program from a few years ago as a full-time employee. So we've given out over 1,000 scholarships locally. We've set up a meat and dairy co-op. We've helped repopulate the marmot population in the region. We're planting trees. Greg, I don't know anything else that we're doing on that side.
No, pretty much covered it, mate.
I covered it, but yeah. So there's quite a few things we're already doing properly, and I think ESG is been around for a while now, but it's very topical. But it's something that wasn't forced on us or required or mandated. When we set this company up, this is our nature. So when we started this venture, before we broke ground, we went to all the locals in a I think 1,400 square kilometer radius to let them know who we are, what we're going to do, and how they can benefit. And now that's we're seeing the rewards of that. 70% of our staff are from within the province locally, so that's a fantastic result. People have moved closer to site to get jobs directly and indirectly. Simple things like our sample bags, grab sample bags, I think, and for mining and whatnot, we provide the materials to locals, and they'll sew and provide those bags back to us, and we'll purchase them. So we're creating opportunities locally. Environmentally, we're already looking at reclamation remediation work for this phase 1 operation. We're part of the Billion Tree Initiative, so I think we're doing all the right things, and they'll continue to grow.
All right, fair enough. And to that point, still just about people. Can you talk more about the youth demographic in Mongolia? You guys have proudly stated many times that you're focusing on developing Mongolia's young talent. How does that play into your team?
Yeah, I mean, listen, we have 99% of our team and country are locals. These are jobs that we've created, both skilled and unskilled. So we've created unskilled laborers into skilled labor force. And that will continue to grow. As I mentioned, we're probably creating another 300 jobs over the next couple of years as we expand. So there's obviously some indirect jobs during construction, but then our full-time staff will also grow. So we'll help educate. There is a skilled labor force in country. They're young, they're motivated, they work hard, and I think they now get that mining is crucial. It's not a negative thing. It's actually positive in terms of job creation, but also the materials that are produced are needed for both the country and for consumables, right?
Fair enough. Can you comment on royalty or streams that Steppe has on its books?
Yep, sure. So there's a 5% government royalty. So the government has no interest in the asset. We own it 100% outright, but it's a 5% government royalty that's actually neutral today because of that 5% premium. Corporate tax rate is 25%. We have a stream with triple flag. It's a 25% stream at 17% of spot they pay us. This will go on until we deliver 46,000 ounces of gold. So, call it another year and a half, 2 years, that stream will fall off to a tail, a perpetual tail, but it'll be a max of 7,125 ounces. So it won't be 25% of our production after we deliver 46,000 ounces, but that's how we funded the company. That's how we built the mine with the partnership of Triple Flag. They've advanced us $28 million US for that stream. And that's helped us acquire and build the mine. They're obviously very strong technically and operationally, so they helped us, diligence this asset when we bought it. It was a fantastic partnership. That's the streaming with them. And then we have a legacy royalty. I think it's 1.25%. So this is with Areva. So Centerra actually acquired this asset a long time ago from Areva, which is a uranium company. So there's a legacy 1.25% royalty with that, and that's it.
Okay, fair enough. Gold continues to be at the forefront of all discussions about current economic and inflationary issues, but what about silver? And is that still a focus for your team?
Yeah, we have probably about over 20. We have over 20 million ounces of silver in phase 2. So it becomes more significant in phase 2. It's a smaller component of phase 1 production. I believe it's roughly 5% of our current production. So it's not as material in phase 1, but in phase 2 it becomes more material. So it's nice to have that. Maybe silver will move as it should at some point. So we have some torque and leverage to silver, given that it's going to be probably closer to 10-15%, I think, of our phase 2 production. So it becomes more material. That Mung deposit, which means silver, has more gold and silver than the other deposits. So certainly there's an opportunity to add more silver. As you can see here from the UK project, we hit 450 grams silver at surface. So certainly silver is of interest too. So gold and silver. We're not just a gold company. Precious metals. There are other opportunities in exploration and maybe in development in country that will have silver. So it can become a much larger component in phase 2 in our growth strategy.
Absolutely. Okay, well, Anil, Greg, I want to thank you for coming on today. Those are all the questions we've received so far. I'd like to pass things back to you before we wrap up for the day, just for some closing remarks, maybe some summary. But again, thank you and everyone else for joining us.
No, great. Thank you, everyone. And as always, we're always reachable anytime directly. So please don't hesitate to contact us. It is quite an action-packed story. You've seen that we have regular updates. So we're doing this monthly series to provide our investors and potential investors the opportunity to ask any questions they want on a regular basis. We'll continue to update the market on a regular basis. So you're going to see news flow at least a minimum on a monthly basis, given we are producing, but there will be exploration in that in phase 2 expansion. So in summary, Steppe Gold is a producer. We're expanding and we're exploring. So we offer the sizzle of a developer, the sizzle of an explorer, and as a producer all in one. And we get to fund a lot of this from our own cash flow, obviously with debt. So quite exciting. And we look forward to updating you again.